Good evening, all. Ira Epstein with your SPDR ETF market wrap-up, and this wrap-up is for the evening of Tuesday, and we're sitting here now on the 25th of October, 2022. First thing, there will be no updates tomorrow from me. I will be traveling. I'm going out of town. While I'm gone, as time allows me, I will record. I won't be in them. I'll do what I did last time I was in, I believe it was Mexico, and I'll put them out with the review as I'm seeing it. I might even let you see my picture with the camera. It's hard to tell what I'll do yet, but I do intend on putting some of these out. When I'm not out, you get the other parts. You're going to have to look at them to see what I do. I will be back next week, and when I'm back, then I'm in town through the holidays again. So that is a good thing. Now, let's talk about the markets right now because it's important. If you look behind me, it's green. I mean, look at all the green on the board. Now, after the close, a lot of the tech company earnings came out, be it Microsoft, by the way, Texas Instrument, we were looking at Alphabet, bad. The headwinds that we had been looking for, we thought would show up in the tech companies, and it has. And the headwind being the strong U.S. dollar. If you took away that dollar part, the companies did pretty darn good. But with the dollar, they're down, so you're down over 200 points in the NASDAQ. You're down about 90 points right now in the Dow. I don't know, 20 points or so in the S&P from what I last saw. So you're going to set back a little bit here. What else? I was looking for a rally in front of this week as we were coming into it, as I thought because of all the down we had in the bonds and notes, there'd be a relief rally in them. You're getting that right now. This rally fits in. And I thought we could rally up maybe to Bollinger Bands wherever they appeared. This was part of my plan that I had 3 weeks ago. As it turned out, it's one of the few ones that worked out as I thought it would. I mean, right to the button in many cases. It's not over. I think that after we get the FOMC, I'm hoping to get a decline. And then later in November, when the Santa Claus rally timeframe begins, and I'll talk about that. There's a specific timeframe when it begins and when it ends. And that's when I'm looking for that year-end rally to carry the market. I am not a wild bull on where this market is going to carry. Number one, I am not in the camp that I'm seeing anything that says inflation is going to abate, or in the camp that thinks that jobs have suddenly soured in the United States. I want to see those reports. We're all waiting to get them. Then I could pivot with everybody else. Make a believer out of me. When we take a look at Freeport, you can see what the market did. Coming back up here, I keep explaining one of the things that's happening. People are looking left and right and saying, I don't want a 1 or 2 year contract. I want a 3 to 5 year contract. That's what they're telling Codelco. And the reason is, no matter how bad things get right now, the way the cycles will go, the markets will get out of this. And if you bet the way that you should, inevitably, what does the stock markets around the world do? They go higher. It's really that simple. Okay, if you bet against the markets for any period of time, I don't care from the Great Depression on, and you go forward within a decade, you got real problems. You've been left behind if you didn't get involved in the market. Keeping up with where things are, very, very difficult. I am in that camp. I believe that. So you can do whatever you want. Beat this market down. Do everything you have to do. We've been through COVID. We're going through inflation now. It'll run itself out and come back. That's how you look at it. That's why investors are buying stocks on these dips, not traders, investors. And they're saying, I'm just going to forget that I own them. I'll do some cost averaging over the next X period of time. Well, this is a market that should have people's attention. You've come up very nicely here. You're over key moving averages, the 18, the 50, and the 100. The resistance is right. You're in it. The Bollinger Band, which tells me, again, you don't buy Bollinger Bands. If you buy them, 95% of the time, the market's going to break away from it to the downside. Now, to get out of sideways action, you have to get over the band and run or under the band and run, either one. I don't call that sideways action. I have a problem with that. It's not tight enough for my type of trade. In addition, you're overbought, so you can buy it. I don't want to own it there. I'd walk away from that. You're caught between the 100-day average, the upper Bollinger Band, 95% of the time. You don't stay over that band. And after a day like today with an outside day up, if you take out today's low, the odds are very strong that wherever the market goes, it's going to be that 18-day average when and if that happens. If it happened tomorrow or the day after, it's a high probability. In Meta, I've been looking for the break. You got down 2 days in a row to the lower band. I'm going to repeat. If you haven't taken that enhanced Bollinger Band course, you are trading like this. Got your hands behind your back? Oh, it's down at 125.44. It's going to break out and go lower versus what the course is teaching you. No, it isn't. That's where the pros taking money off the table. Could it still go lower? Yes. Are the odds with it? No. How are the odds stacked against it? 95% of the time. I want to be in that camp. So you're getting your rally. Now, how could this do well? I mean, be it Facebook, Alphabet, they're all in big trouble. The advertisers are pulling back on this type of advertising. And we saw after the close how the pain is coming in. That's why you're down 200 points right now in the NASDAQ. So Meta going to be dragged back down tomorrow, most likely. We then look at Apple. And I was telling my subscribers, I said, the smart money play, you don't want to be long now up here. Too difficult of a road for you to go with. The market's up with the whole market. You know, rising tide lifts all ships. You agreed? They don't go down in a rising tide. That's why if you ever tie one up and you go to the piers, you see how the ropes can move up and down as the boats go up and down with it, okay? You don't make it tight to the end because as the water comes in on a good tide, you got a problem. You can sink your boat. Disney, Apple, anything with streaming went back up today after we saw Netflix. So Netflix has set this all up. It's been a good run, but when you get to the 100-day average, the upper band, you own it. I want my money, especially in front of an FOMC meeting. I'll let you guys own it. I'd rather walk away. In XLF, it's the same thing. You're overbought. None of these are embedded. You're overbought up to these key averages. I know you're going to tell me it's going higher, and you're probably right. It's immaterial. I'm not betting against it. I just would tell my subscribers, time to put your money in your pocket right now. In XLI, so here we are in the industrial sector coming up. Now, can this withstand the problems that I'm hearing? Now, let me explain that. Texas Instrument came out and really gave a very dire, bad report today. And I didn't like what they said. Now, why do I care so much about Texas Instruments? Because they're one of the big chip makers that manufactures from square A to Z their own product. Most of the other big boys farm something out here, farm something out there. They have better cost control via that than some of the other big ones. Well, what does that mean to me? If they are giving me a warning, so let me think this out. Chips are in everything, and they're having a problem because they see the downturn. Are we looking, not, and that's why I'm talking about this in the industrial sector, are they seeing something that there's going to be a lag here and these things are going to come back down? You got to think that. If you don't, okay, but that's what I think. Here's the semiconductor. We heard how bad it is. Look at how it's going up. I wrote tonight in my report about 2 large plants that are now going ahead in the United States to build. They're breaking ground now for natural gas is 2 of those. We have in chips another plant that is about to come on. So the money's coming, be it chips, natural gas. I always get worried when it comes on. What's the time frame? The natural gas one I get, it won't even be ready for 4 years. So those 2 make sense. But some of these chips that are being built now, and I keep hearing these stories that from Texas Instruments and the like of the weakness. I guess you got to build now to figure out where you'll be down the road. But, you know, that's when you do it. You do it when things are bad, not good. You don't build at the top of the market. You build at the bottom. Makes sense. remember what these home builders are. When you go and you look up the history of XHB, it's the malls and things of that nature, primarily. That's what I understand it to be. I just see it sideways. The market got down to the lower band, getting a bounce. I see big time resistance, the 100-day average to the upper Bollinger Band. So the rally that has happened in many markets, including these, not unexpected. I've been here talking about it. I started talking about it 3 weeks ago, in fact. And I said before we get to the FOMC, regardless of what happens, if they kept beating down interest rates, you'd get a rally in front of it. That rally will translate potentially into what the equities do. Equities go up, and then you got a real problem because nobody knows what this next CPI and jobs report will be. I am a broken record saying it. I haven't deviated at all. Don't criticize me. I miss nothing. I've been telling traders and I've been preaching to you, take the enhanced course. This is where you're coming out of markets. Doesn't mean you're going long. That I can agree with. In XLE, the energy sector, still a powerhouse sector. Does anything look bearish to you on that? Not to me. I heard a bright guy say something today. In fact, it was maybe an hour ago, 30 minutes ago, out of, I think it was Bloomberg in Australia. And he said, you see 3% inflation in Japan and you wonder why the bank isn't moving. And he said, you do realize they import their energy needs. If you strip out the inflation, do they have 3%? No, not even close to it, actually, he was talking about. And then they've got the demographics that keep collapsing on them. He doesn't see their bank making a move for quite a while. Makes sense if you think about it. If you're importing your inflation, it's really not embedded. In the gold market, trying to work its way higher. I think you see that as well as I do. And in the silver, you're there. So I am looking as we get up now to the gold and silver that as the dollar has retreated, and maybe the dollar at the 114 level has made a short-term trading top. I think it probably has. And it's going to take a while for it to get through that top unless the CPI jobs data is a shocker and the world runs to the dollar because they're just petrified of what they see. I have no idea. But I expected that markets would correct. In other words, dollar was up, down. The down market and the stock market correct in front of this CPI. I didn't realize that we'd hear so much talk, in all fairness, about the transition out of these big rates so quick and that they want to go get to the 25, 50 basis point ones and then stop them. Okay. I'm still not seeing a pivot yet in 2023. Pivot being the Fed actually lowers the rates. I get the talk that at some point you got a plan. That makes all the sense to me. Are we there for enacting anything? You got to show me the data, then I'll know. And I know you wrote me, and I'm watching on my YouTube channel how people are writing me and saying, Ira, don't you know that data's old? The Fed is always behind it. I get what you're saying. Do you have a better solution? You all criticize what the Fed did. What should be their solution? Okay? You got to have data. I wish they had up-to-date data rather than data like Kay Schiller today comes out with an August report. What good does that do me from August? I don't get these people. To take that long in today's day and age of internet, high-speed connections, to wait for the August data in October 25th? I don't like that. TLT, here's your bounce. Not a surprise. Now, you had stretched the market out from under the Bollinger Band. You did it even worse when you were looking in some of the other markets, but you're getting your bounce, and that's what I was looking for. UUP, the dollar. Okay, so the dollar peaked here, not up here. Now it's coming down. Keep dropping. I think that when you hit the Bollinger Band, you'll be in the zone of the low for it. Then I'll look for whatever it does afterwards. Is there a trend trade? There isn't. You have a higher high, lower low. The last thing I'm looking at is the FXE. On my subscriber video, I was telling traders that if you had bought long here, at least that's what we said in the service, we had losers too. I always balance it out. I wish I didn't have the losers. Everybody has losers. Contain them there. Try to let your profits run. What do you think I would say to them today as you're up at that upper Bollinger Band number. Out. Do you need the last 8-9 cents? You're overbought. You're up there. Let the next guy have it. Out. You're in the zone. That's what it's all about. You're dealing in pennies, not dollars. Now, if it were dollars, I'd be waiting. But you're not. You're in pennies here. Today's high was 92.02. The Bollinger top is 92.04. Come on. Would you want to give up a trade like that from the 18-day average up there and say for 2 cents, I'm going to hang in until it hits it? I hope not. I certainly wouldn't. But you hear me talk all the time about what I do in the morning. I can prove it to you. Come in and join me. If I'm lying, it's there. These are all videos, all right? I've got records of them. Got to keep them. I know what I'm saying. I don't trade people's money. Do we understand that? Won't manage your money. Don't want your spider ETF account in any manner. What I'm after is working with the idea that I want to be the guy you go to so that you say, there's a guy, look at, he's got the experience. Here's what he's saying. He's covering these markets. I rotate these all the time, so don't get married to what you see on the screen. Like I had FXE, where's the UUP? You just saw it. I'm always rotating and adding. This started at about 25 charts. It's over 40 at this point. So it goes that way. And every Saturday, I look at the weekly charts, just weekly, because you can get long-term trades that way. So for the longer-term gentleman or gentlelady, as I'll say it, you want to trade longer term? I throw the same thing out. You'll be in markets sometimes, I don't know, it could be a month, 2 months, 3 months, whatever the trend's going to last, because each bar represents a week. When we're looking at the daily chart, you can see how long they're lasting. Now multiply that times a week for each one. Gives you an idea of what you've got in your timing. Timing is everything. Momentum, you tie it together, you see where you're going to go with it, and that's it. This is not much money, folks. We're talking for 30 days, $9? That's it. You can quit whenever you want. You can stay for a week. Get out. It'll stop the time you tell us to stop it. It's that simple. Can I make it easier for everybody? I don't think that we can. So how do you get this and find out the information about it? You go to my website under the word research. It's all there. And do yourself a favor when you're on the website. Take a look at the Enhanced Bollinger Band course in education and get yourself that other tool. It will stick with you. It's going to be there. I have yet to have people, I'm sure there's somebody out there that hates it, that says that was just the worst waste of my time. I'm sure there's a guy that probably wrote me once. Maybe I missed it. I don't think I did, but it's possible. I had one guy challenge me on it. I said, have you ever taken a Bollinger Band course? No. Well, how do you know it's no good? Well, I don't believe in this. That's different. You can't deny what's on the chart. I don't care what you believe. I'm not interested, frankly, in what you believe. I'm interested in this is a pattern. It keeps doing this on the chart, and it seems to repeat itself on a regular basis. Nothing is going to work 100% of the time. But it's based on the theory that 95% of the time, the market will trade within the algorithm, and I found a kicker to it that builds on that. That you can't get away from because it's quantitative. I'm Ira Epstein. I will not see you tomorrow. You will see me tomorrow. It'll be Thursday. I will do something for you, and you will get part of me then. You have a good one. Take care.